The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 27th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 10 o'clock in the morning. That's right. If you're listening in the normal time, we are recording today's show 1 hour earlier. We will not be able to record a show tomorrow. If you are listening live, I would love to hear from you. The easiest way to do that is to send me an email. You send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Now, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We begin our day with a mixed bag. The mix is coming from really the Dow and the New York Stock Exchange. Dow's up about 135 points. New York Stock Exchange up 34. The other U.S. indices trading to the downside. For example, the S&P's off 20 points. 203 for the NASDAQ. That's about 1%. 15 or 0.7% for the Russell. Trandy's down 17. Semi's off 107. You've got gold that's trading down $40. That's 1 4/10. Silver's off 48 cents. That's 1.5%. Light sweet crude's up $1.11. 1 6/10% there. You got natural gas that's up 2 pennies. I didn't do the 10 a.m. update. Mr. Bill had a request to take a look at my 9-panel market update chart. So why don't we just slide over there, get a general feel for the overall markets. So we'll put up Stevie's 9-panel market update chart. Up left-hand side is the ES Mini. Now, the ES Mini, boy, this is, on this chart, it's not showing the new profile. When we get to another chart, it's going to show profiles. What I can share with you is ES Mini is attempting to form new profiles out there. So we'll take a look at that. Right now, if that new profile has vanished, and it may have, price is trading inside the buy zone of either the old profile or the existing profile. And that's between the price range of 59.36 up to the 61.62 level. So price is trading inside its buy zone. At the same time that's happening, the NQ is testing a hammer candle for back on January 13th. You can run a trend line. So price is also hitting a potential level for trend line support. The Dow Equity Future contract has a buy the D point pattern out there. Let me update this. This is something weird. Maybe it's because I don't think that's what the Dow charts. Yeah, it is. Okay. So we had a key reversal bar 2 days ago, and that's what set up the buy the D point pattern. Now, there is a new profile. I'll wait for the new profiles, Mr. Bill, until I get to my daily equity future contract charts out there. If we take a look at high-grade copper is just a consolidation with inside his profile. Gold is now trading below profile support. That may open up the door for move down to 27.84. Silver's trading below support. Profile support may open up the door for move to 30.79. Light sweet crude found support at its breakout level, the breakout level being 68.63. That would suggest a rally up towards profile resistance at 70.59. You've got a TD9 count top on the April contract for natural gas. It did give way to that green oscillator and change line, but it did test and so far reject the top of the profile. So that may be the extent of the move to the downside for natural gas out there. And the 30-year Treasury printed above its oscillator and change line. It's an A to B equals CD pattern to the upside out there. So that's the 9-panel chart. But let's switch over and take a look at the daily equity future contracts. Give me a moment here. And here you're going to see, I'll update the chart momentarily, but I want you to grab these figures. I posted them inside the den for folks earlier. This chart is showing us a new profile that is attempting to form for the ES Mini. That new profile is actually within inside the prior profile. What that suggests, if in fact this profile does take hold, is to expect a consolidation market. When one profile forms inside another profile, the message would be a consolidation. When a profile forms above the prior profile, bullish market. The opposite, obviously, a profile forms below, like inside the Dow Equity Future contract. However, the Dow Equity Future contract has generated a bullish buy the D point or Gartley buy pattern out there. So you've got the NQ that's sitting at support. You've got the ES Mini sitting at support, whether it's the old profile or the new profile out there. The Dow Equity Future contract confirmed its profile from yesterday. Support here. And these profile levels are so important. 43,484, resistance at 43,949. Now, this profile had formed below price, so it's very possible it's just a counter trend move up to 43,949. That level was tested yesterday and rejected, so we just got a bit of a consolidation that way. Inside the Russell 2000, it still maintains its Rhodes momentum indicator. Bottom signal was formed with a bullish hammer candle on January 13th out there. That level is being tested. A close today below 2172.20 would negate that signal and suggest that we had lower out there. So that's what's going on with regard to and there's new profile here too, by the way. The new profile has got support at 2171. It resists at 2299. So really two of the four forming new profiles today are attempting. The Dow actually did it yesterday. The NQ is also trying to form a new profile, by the way. It's very hard to see it. It's actually above price. And above price meaning 21,920 would be the bottom of that profile, 22,053. The center, 22,319 would be the top. On my black background charts, which I don't have fired up now because it slows the overall system down, it actually has profile we're trading with inside it right now. Unfortunately, what I will do is I will post in the den. I'm not going to be able to do a show tomorrow. We'll barely have time to do much of a newsletter. But what I will do for you folks, so those of you that are listening at 10 or 11, go back to an early point in time. I'm going to say it's going to be around 7 or so when I would post those charts, the daily equity future contracts that is with regard to their new profiles, whether they formed or not, just simply so that you'll have that data. Have access to that data out there. Now let's go from here and let's go take what's going on the intraday charts out here. So let's go from this to inside the NQ, and on the NQ has a TD9 count top out here that it formed. That's its key. I'm looking at the 2-hour chart, by the way. That's its key level of resistance out here. This will be for today. This may be for tomorrow out there, and that's the high that took place at 2 o'clock in the afternoon. Yes, at 12 noon yesterday. We were talking about when we were on the show, and that high is at 21,409.25. If price closes above that, a market is going to move higher. To the downside out here right now, the NQ is just pulling back and testing a hammer bottom. That might have been a buy the D point pattern. I'm not going to spend any time taking a look at that. We know the price is testing that swing point. So far, it's rejected it. If Rhodes momentum indicator signal has been triggered, a bullish reversal candle now would confirm that form of a bottom pattern. On a 5-hour time frame chart, you've got prices testing a prior swing point as well as profile support. We come back to this break. We'll finish taking a look at the NQ. And then we'll start taking. Well, we only really have one question to request at this stage here, so let's fire them up, Denners. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the diving down into the NQ. We were taking a look at the 2-hour time frame. We know the price is going against the bullish hammer candle out there. So far, that has held. You've got the 4-hour time frame chart also testing a swing point. Rhodes momentum indicator was negated during that last segment, when we finished at 10 a.m. The next one's going to be at 2 p.m. Today. So a bullish reversal candle there would confirm another Rhodes momentum indicator bottom signal out here. The 5-hour time frame chart prices are consolidated with inside its profile. I think I was about to give you those numbers. Profile at 21,071 is support. 21,397 is the center, and 21,560 is the top of the profile out there. If I take a look at the daily time frame, so on the daily time frame, we know that price was up against a little bit of a trend line. It's found, that's the only support that it has out here. It's really all that I've got at this stage. Price is testing this daily bullish hammer candle out here. So that's a January 13th level. So far, it's tested it. A close back above 21,037 today is going to be a rejection of that swing point. If it closes under 21,037 and above the low at 26.94, that's the low of that swing point, that hammer candle, then that would suggest that perhaps that is going to be tested. It would be a very small A to B equals CD pattern to the downside if that hammer candle from January 13th were to be negated. But right now, price is testing that. So in essence, I would say we've got a lot of tests of support. Whether they're going to hold or not, that I don't know. Let's take a look at the advanced decline oscillator, as well as the spot VIX index. Advanced decline oscillators on the left-hand side, we can see that we're still below the zero threshold level. Zero is where that black horizontal line is at. That just simply tells us that sellers are the ones that have the upper hand here. The spot VIX is traded above its 50-day exponential moving average. The 50 days at 1681. It's the gold line that's on my chart. So also here, sellers are the ones that have the advantage. So even though we're coming into support levels out here, it is still the sellers that are one that have the advantage, but we've got the advantage of those new profile levels out there, or in the case of the Dow, its profiles from yesterday. What else should we take a quick peek at? Let's take a look at the cash indices out here, see what's going on. If we take a look at the Dow Transports, to the downside, the target would be 42,927. That's a TD9 count breakout area. To the upside, it's 44,118-ish. It's its green oscillator and change line. In the S&P, the downside cash index 5887, upside 6041-ish. The NDX 100 downside 2436, upside 21603-ish. The Russell 2000, it tested a prior swing point. So far that is held. A close below, let me squish this together. To the downside, 2102.40. To the upside is 2216. A bullish reversal candle today would confirm a Rhodes momentum indicator bottom. In the case of the semiconductor index, it's testing a swing point from back on January 28th. A close above that high, 4928.19, would be a negation of that, and that would suggest that price would go rally up towards this oscillator change line at 50.61 out there. In the case of the transports have tested and rejected their breakout level. That's at 15.785. If we take a look at NASDAQ Composite, downside 18.714 would be a place for support. To the upside, 19.507. Its oscillator and change line. And finally, in the New York Stock Exchange, downside would be 19.176. Upside would be 20.803 out there. I'm going to go ahead and close these files. It's going to take us back to the main screen momentarily. Well, I'm going to try to do that. Just trying to free up some resources here. All right, that'll be accomplished. So now what do we want to take a look at next? I'll tell you what, let's do this here. Let's just take a look at the currency pairs, get a feel what's going on out there. Now, by currency pairs, we're going to look at the euro, the yen, and the pound. We're not going to look at the U.S. dollar index out there, only because I can't bring you the can't bring that on this white background screen with the so where did I put it? Currencies with the data feed that I've got right now. If we take a look at the euro's taking a dive to the downside out here. It's trading below its green oscillator and change line, so it's moving lower. U.S. dollar index is getting higher. Euro makes up the bulk, 57% of the U.S. dollar index. In the case of the pound, the pound has already formed a buy the D point bottom pattern, with price back at its breakout level at 149.36. The issue right now that you can see that it's running into is that red oscillator and change line. So if the pound is able to close above 150, we see a further rally. From a support standpoint, support would be 148.84. So that's on the yen. If we take a look at the Great British Pound, it has a TD9 count top. It should take price back to its oscillator and change line. That's at 1.26. If price closes below that, it opens up the door for a move to 1.2378. Lastly, Bitcoin. Bitcoin is targeting the 78,280 level. It's at 86,200. Rhodes momentum indicator top. A to B equals CD pattern to the downside, and that breakout level being 78,280. All right, I'm going to go ahead and close down the currency pairs as well, and then we can start moving into some requests that have come in. The first one that we're going to take a look at is going to be for GTE, who wants to take a look at the Hang Seng. We'll get those charts up here momentarily. And the Hang Seng is, that was Amazon. I put the Hang Seng over here. Sorry about that. So now let's take a look at the Hang Seng. Here we take a look at the Hang Seng. You can see we made a new all-time high. Not an all-time high, a new 52-week high today. What the Hang Seng has, if you really look at the weekly time frame chart, you're going to see two different A to B equals CD patterns to the upside. And that, in essence, is what really is underway. On a daily time frame chart, if the Hang Seng were to form a bearish reversal candle, that would generate a Rhodes momentum indicator top. Today was bar number 5. If this continues to rally, it could form a TD9 count top mid next week out there. But right now it looks like it wants to rally. The initial price target for an A to B equals CD, one is at the 25,400 level. The second one is at 26,927. If we look at the monthly time frame chart here for the Hang Seng, it's bullish. It's suggesting that it should rally further as well. So yeah, the Hang Seng GTE is in a buy mode, so to speak. One of your favorites, XPE, I do want to remind you that it's likely going to form a TD9 count top. I believe it's going to form it between today and tomorrow out there. So that was an extra but goodie. Doug and Steve wanted to take a look at Amazon inside the Tiger's Den. So let's take a look at it. We'll do it outside the Tiger's Den. We'll do it live right here. We take a look at Amazon. You got a nice big old bullish hammer candle. I'd love to be able to tell you that forms some type of A to B equals CD pattern, but then I'd be lying to you. What was it doing when it formed that bullish hammer candle? That's really the question, Dunk. And that question can be answered by looking at the monthly time frame chart. Again, sometimes, we look at the daily. There's a real reason why I put up daily, weekly, and monthly out here. Of course, it can give us three different messages, but the longer term is the one that you really want to know. We take a look at Amazon on the longer term basis. We don't have any kind of a topping pattern here. Let me just open this up. I hate opening it up. Not that I hate opening it up. I'd really be hard pressed to. There's no A to B equals CD top yet inside of Amazon. It's got way further to go. So what has transpired here inside of Amazon is price this month pulled back, tested, and rejected the screen oscillator and change line. It's in bullish breakout mode. The weekly says I beg to differ because price closed below profile support, which was at 218.83. You want to watch that level tomorrow. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at the charts for Amazon. Again, in summary, we're showing the monthly time frame chart has got no topping signal. Price pulled back, basically, and tested. So far, rejected screen oscillator and change line. It's trading above that. And profile, it's in full breakout mode. The weekly time frame chart, though, has a wave number 7 top, the letter G. Closed below profile support last week, trading below profile support this week. That suggests Amazon might get back to test the 185.23 level. Of course, it has to crush through the 203-ish level in order for that to be an outcome. You can watch the bullish hammer candle low from a couple days ago. That low is at 204.16. If price were to close below that, that would certainly lead to lower price out there. There's a new profile that has formed. You've got support at 211.68, the center at 214.45, and the top at 219.60. And prices run both the center and the bottom of that profile, right? It's run from 211 to 219 out there. So these profiles are extremely helpful to us. Discussion about the wild and crazy swings that we are seeing inside the marketplace out there. And absolutely we are. But again, if we take a look at our daily equity futures and we take a look at those profile levels, they're certainly going to assist us with our trading. So hopefully you grab those. And of course, I had punched those in to the Tiger's Den earlier this morning, maybe around the before 9 o'clock, 8:30 time frame, something along those lines. Let's go to our next request. Next request coming in was to take a look. We're going to change screens for that. Now let's look at the gold contract. So I fired it up on my old, not my old system, the others, another set of charts, the ones that I used to go to that are on a different screen out here, because it's got the monthly time frame as well. So if you give me a moment, we're going to go ahead and change screens. Mr. Bill's going to remind me to change back as soon as I'm done with this review, if I forget it. Now that I said it, I probably won't, right? So when you look at the monthly time frame chart here for gold, we're on the continuous contract here. You can see that we're in bar number 8 of a TD9 count. That says the top could be in. TD9 count tops will form a bars 8, 9 to the bar following bar number 9. But price here is above its oscillator and change line and profile resistance out there. So it signals bullish. It just says careful, caution. Weekly chart. Looks like it may form at week's end a Rhodes Momentum Indicator top. It's already it's not a key reversal bar, but it is a bear sash candle out here. But price here is testing support, which is that oscillator and change line. That's the first level of support, and that's at the 28.84 level. Below that would be 28.23. And gold, if we're only a counter trend move to the downside and it were to move lower, would find support or should find support between 27.76 and 28.23. On a daily time frame, we're trading below profile support. We traded below it 2 days ago, got back inside it yesterday, back below it today. It beat 29.22. If we close below it today, still need a close below it tomorrow to confirm a profile change in trend. If you were to get that, then the price target becomes 27.84. That's its daily TD9 count breakout level. When you look at the intraday charts out here, 30-minute being the shortest time frame, it needs a bullish reversal candle to form a Rhodes Momentum Indicator top. The same can be said for the 60-minute. The same can be said for the 2-hour time frame chart, and no bottom signals on the 4-hour or the 5-hour chart for a Goldilocks. So GPH, I hope that helped you out with regard to that review of gold. I'm going to close this chart. Then we're going to change screens. It should default back to my main screen out there. So if you give me a moment. And then when all that's said and done, we're going to go take a look at LTBR for Dan inside the Tiger's Den. So give me a moment, change our window. Let's get back to the main screen out there. How about that? Voila. Now all I have to do is just go figure out where I put LTBR. But that's going to be easier solved than not. Give me a moment. We'll get back there. Good Lord. Okay, let's try right here. And we've got the SMHs. Nope, one, not too many. Give me a second here. We'll be taking a look at LTBR. This is for Dan inside the Tiger's Den. LTBR consolidating with inside its daily profile. That's between the range of 939 to 1523. It had formed a Rhodes momentum indicator top. It took price all the way back. In fact, we closed just slightly below profile support at 939. Yesterday, we got back above it. Today, we've rallied right up into resistance. Resistance is at 1203. That's the oscillator and change line. If price can move above that level, you'd have another battle at 1273 and then one at 1523. On the weekly time frame chart, price formed a Rhodes momentum indicator top. It did that last week. It has now taken price back to its oscillator and change line, tested and rejected it, and we are trading above the top of its profile. LTBR for a weekly time frame, Dan, is a neutral signal, neutral to bullish because its work to the downside may have been done. The monthly time frame is going to go ahead and confirm a TD9 count top this month. It'll complete that top next month. So you got a TD9 count top on the monthly. The weekly's done its work, but that top is still in place. Rhodes momentum indicator top. Same thing on the daily time frame chart. Looks to me like you've got maybe a bit of a chop fest going on here. But watch 1202 next as far as today goes. You close above that, 1273 to 1523 would likely be the next battles out there. Dan, hope that gave you the info you were looking for. Duncan Steve wants to take a look at the SMHs out here. So we take a look at the SMHs. They right now have pulled back to test support. That is breakout support, and that is at 238.58 out there. If price closes below that, the next level of support on a daily time frame, we're going to take a look at find the swing point out here. It's going to be the swing point. Let's use this hammer candle. The hammer candle from January 28th. The volume there was 11 million shares. So far today, you've pulled back with 2.6, so you're pulling back with similar or lightish volume out there. To get a full rejection of that swing point inside the SMHs, you would need to see a close today above 241.03. As long as price holds 238.58, a key level of support, its breakout level will have held. If price closes below that, it opens up the door for that hammer candle. Below the hammer candle, it would be the 218.22 level. That's the weekly breakout area. On a monthly time frame, let's populate this chart and see where we're at. You can see the Rhodes momentum indicator top. You can see the TD9 count top. And, man, what you see is nothing more than dead money. Ever since August of 2024, it has been a sideways chop for sure out here. Yes, we have moved a bit lower. We're trading with inside the sell zone. It's amazing, really. It tells us how strong, in my opinion, it tells us how strong the SMH is, because the SMH is trading between the range of 235.43 to be exact and 259.25. It's been doing that. As I say, it's been trading inside there since July of 2024 out there. Almost a full year. Almost. We're not to July just yet. But it has been a narrow-bodied range when all was said and done by the end of the month. And this month may be no different. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back up, folks. We're taking a look at the charts here for Marvell. This is also for Duncan Steve. It's got an A to B equals CD pattern to the downside. It had a B point out here from the trading session of January 27th out there. Volume was 38 million shares. When that was passed, it's passed with 17 million, passed with 24 million, passed with 13 million, passed with light volume. So that's good. That would be what we, Tom, named a Tiger Gartley. So what you're looking for here is you're looking for a bullish reversal candle. If you get that, then you have a Gartley buy pattern out there. And as I said, it would be considered a Tiger Gartley since the B point was passed with lighter volume. Short of a bullish reversal candle forming, price is likely to go down and target 87.41. 87.41 is the bottom of the weekly profile. There are tops, Rhodes Momentum Indicator tops for the daily, weekly, and monthly time frame. So you've got to be careful here and cautious, but a daily Gartley buy pattern could go a long way to forming that bottom, to identifying that bottom, especially if Marvell on its weekly basis is able to stay within inside its profiles, 87.41 out there. And on a monthly basis, if we get a test and rejection of 89.45, that happens to be the monthly oscillator and change line, that would be a nice bullish outcome. Now, it would put everything in neutral position out here. But right now, for the daily time frame for Marvell, what you're waiting for there, Dunk, is you're waiting for some type of bullish reversal candle. Yes, there's a nice move in XPEV, but there's going to get a TD9 count top out there, Rahul. So I remember because we looked at it yesterday. I don't remember the count. I think today is either bar number 8 or 9 out there in XPEV. Let's go take our next request, which is to take a look at natural gases for Mr. Bill inside the Tiger's Den. Natural gas, we're in the April contract out here. In the April contract, with regard to the monthly time frame, looks bullish as can be out there. It's got a buy the D point bottom pattern that was formed with this bullish piercing candle. We're trading above profile resistance out there. Everything is looking pretty good. The only thing that does look good, Bill, is on a monthly basis, we are testing and potentially rejecting the low of the swing point from September of 2022 out there. And that number's at 4.168. I'd be more concerned about that. First, if I had the volumes that I could rely upon, and I'm not sure that I'd get that out of this application here, so I'm not going to even go through that. But I would say I would be more concerned about that if I were to see some type of top on the weekly time frame chart, and there we don't. Now, there is an A to B equals CD pattern that has formed. Let's draw that in here. The A point down on the low from November the 8th out there. The B point that's got the bar number 8 of that TD9 count pattern out there. Let's copy and paste this same A to B equals CD, A to B line. Let's move it over to the C point. My apology, I've got to move my chart here in order to be able to accomplish that. So we can see that this has attained the 1-to-1 level out there. And therefore, if you were to get a bearish reversal candle on the weekly time frame, then you could have some trouble in River City. Now, there is the famed TD9 count pattern that you have on the daily time frame. But what price has done, as I'd mentioned earlier, price has pulled back and it's tested what I think is support. It is the top of that profile. It was the oscillator and change line. It's really both 389 and 401 out there. So no top on the weekly, no top on the monthly, and you've got a top that is tested and held support. So it looks like to me, and I think your message was you were looking for natural gas maybe to take a turn to the downside. My read of the charts is I don't see that. You would need to see, I think, you would need to at least see a close below the top of its daily profile to suggest that there's some shenanigans going on. Shenanigans meaning price moving to the downside out there. So watch 3.895. If you do close below that, then I will say, yeah, absolutely. And your target would be the buy zone. The buy zone on the April contract is between 353 and 362 out there. So hope that helps you out, Mr. Bill, with natural gas. If there's something I overlooked or you're looking at differently, please let us know so I can share that with the audience out there. There's a bull and there's a bear. So there's two sets of eyes out there. Always good to look at both sides of the trade, but I don't see the bearish side as we speak right now. Let's go take a look at ticker symbol ICVT, and this is for Tom. Don't know if I've ever looked at this. Tom, here's what I can share with you. First, you've got TD9 counts all over the place. First, this formed a daily TD9 count top. That's the most recent one, and it did that on February 19th. And now what you have is you have price that is trading below profile support, below its breakout level. So our question is, why did price stop where it did? Well, first, we had 5 consecutive days to the downside. So, a day or two to the upside, okay, that's just normal relief kind of rally. If we take a look at the weekly time frame chart, we have a TD9 count top that formed back in December 6th. That led to a consolidation with inside its profile. Its work to the downside in essence was done as price was able to get back, test and reject the bottom of that profile at 84.30. Again, daily time frame, I've got no bottom signal. There's no A to B equals CD pattern. There's no nothing as we speak just yet. And on a monthly time frame, you've got a TD9 count top that is going to go ahead and complete this month. 89.71 is the key level for price to close above, not this month, but next month or the month after that to negate that signal and suggest that you move higher. Right now, it's consolidating with inside its bullish structured profile. On a monthly basis, ICVT has a buy zone between 82.84 and 84.21, and the sellers are up at 89.71. And that's important. The reason why I spend time on that and the reason why I shared with you that, first of all, that not was it just a profile, but it was a bullish structured profile, is because Tom would need to know on the daily time frame chart, as price is moving back, where is support? We got that 84.30 number, right? It's already been tested once. That's the bottom of the weekly profile. But now we've got that buy zone that formed last month out here. So it gives you additional information with regard to ICVT. So I hope that helps you out. And thanks so much for your request. Tom G writes in, and he's interested in taking a look at NVIDIA. So let's go back. I think I put it in these charts. Yeah, we did. So his question is short term, what is it doing? Well, short term, price pulled back and tested a swing point from 10:30 in the morning back on February 25th. It didn't get down to the low, and we're still trading inside that swing point. The volume there was 26 million shares. The last half hour, we were into it with 36 million shares. So 36 inside a swing point that's got 26. Right now, you're at 10:49, so you've got 11 minutes left, and you're doing 13 million shares. NVIDIA, on a short-term basis, you want to watch that candle. That's the candle from 10:30 in the morning back on the 25th out there. The low was 124.44. The high was 127.65. If you close above, well, first, if you test the low and reject it, meaning you close back above it, that'd be a test rejection on lighter volume. If you test the high, which it's already doing, and you close above it, 127.65, that would be also a test rejection of a swing point on lighter volume. Now, where's the intraday resistance levels? The next one on a rally would be 128.37. Above that, 129.95. Above that, 131.46. Above that, 132.97. And if you're wondering, when NVIDIA gapped up this morning and sold off, why did it do it? Well, it gapped right up into the TD9 count breakdown resistance level at 134.88 out there. Overall, long term, you got a daily TD9 count top inside of NVIDIA. And it's performed, but just kind of moves, it hasn't performed poorly at all. 120.76 is its breakout level. You can notice that weekly chart, 114.86. TD9 count breakout level, that too has held. So just sideways movement for the most part inside of NVIDIA. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Let's take a look at the ASPN. This is for Brent in Martinez, California. Brent was good enough to identify the daily TD9 count bottom pattern that's going to go ahead and complete today. So yes, Brent, I'm in agreement with you on your charting application. You're going to get a completion of a TD9 count bottom pattern for its daily time frame today. That should rally up towards 790. 790 is a daily oscillator and change line. If price can clear that, The next level of resistance would be 982 on the daily time frame. That's the courtesy of your TD9 count breakdown resistance level. Now, let's look at the intraday time period. The intraday time period has negated a TD9 count bottom. It did that I did that yesterday afternoon as you came to the close. Bummer there. We also negated a TD9 count on the 130-minute time frame chart. However, the good news is it's going to go ahead and confirm a Rhodes Momentum Indicator bottom pattern out there. And price should rally up towards 809 to 844. You're going to get a Rhodes Momentum Indicator bottom on a 65-minute chart, on a 30-minute chart, on a 15-minute chart. So it's only the 195 that hasn't formed out there. So you should get this rally at least to 790. Maybe 982. Now, let's look at the weekly time frame chart out here. Weekly time frame chart, as we count the letters, we get to wave number 7 here, wave number G. That says if you get a higher low next week, that confirms that bottom signal as price is approaching the 717 level. That's the TD9 count breakout area for the monthly time for the weekly time frame. The monthly time frame out here, we're trading below all kinds of support. So the monthly is not going to really assist you a whole lot. You're trading inside a swing point, it looks like, from back on August of 2023. Volume 18 million shares there. This month you've done 49 million shares. So the monthly is questionable. Weekly, maybe. Daily, definitely. The daily and the intraday. So you're at least going to get at least a counter trend rally. Folks, have a wonderful weekend. I won't be here to do a show tomorrow, but I'll be back with you on Magical Monday. Have a terrific Thursday. Take care, and thanks for all your help today.